Hi, and welcome back to our edition of Technically Speaking. My name is Violeta Todorova, and I'm Senior Market Analyst at Legacy FX. After hitting a high of $133 in March 2022, the price of Brent has pulled back and traded sideways between $97 and $120 over the past 2 months. Brent rallied strongly over the past week and extended gains on Tuesday after the EU agreed to slash oil imports from Russia amid already tight market and rising demand from Europe and the US. China announced 2 of its largest cities come out of 2-month lockdown on Wednesday, therefore demand is likely to pick up further. OPEC Plus is expected to stick to last year's deal at its meeting on Thursday with a modest July output hike by 432,000 barrels per day. European Union leaders agreed in principle to cut 90% of oil imports from Russia by the end of 2022, resolving a deadlock with Hungary. Once fully adopted, sanctions on crude oil will be phased out in over 6 months and on refined products over 8 months. The embargo exempts pipeline oil from Russia as a concession to Hungary. 2/3 of the Russian crude oil exports are seaborne, and around 2.1 million barrels per day of oil will need to be replaced by the EU by the end of the year. Heads of government from the EU's 27 member states made a key concession that imports via pipelines will be exempted from the embargo, allaying concerns from landlocked Hungary, Czechia, and Slovakia. While this development is bullish for oil prices, as demand is growing and supply remains very tight, some analysts argue that the rise in oil prices is likely to be muted, as EU ban is largely priced in. However, evidence is mounting, a new commodity supercycle is underway, and a rapidly surging global inflation. In many major economies, inflation is hitting 30 and 40 years highs and running between 8 and 9%, with no signs of easing. As a rule of thumb, a 1% rise in inflation equates to 10% rise in commodity prices. With inflation not expected to be contained at least until mid-2023, we are of the view that prices for soft and hard commodities will continue to rise throughout 2022. From a technical perspective, the daily RSI indicator broke above its trading range, suggesting that higher prices are likely to unfold in the weeks and months ahead. Given the improvement in the internal momentum conditions, a subsequent break above key resistance of $120 is highly likely in our view, which could trigger further upside to $124 and possibly a retest of the previous high of $133. Thank you very much for tuning in. See you next time.